China intervenes but fails to stop the rout. Good morning and welcome to IGTV. We're live here Thursday, 21st of January. This is how the pre-market is looking in London at the moment. We have indications of a slightly higher start at the moment, but it has been an interesting ride since the close last night. We'll hear in just a minute how the Asian market swung from a positive start to a negative end, all coming at the time that the PBOC comes into the market but fails to stem the global rout with losses in the Chinese markets today. But at the moment, as I said, here in London, that's the FTSE 100 on a daily chart. A quick update on the hourly chart just to show you how the money has been moving on from the close last night. We saw this positive move that we saw. We'll take a look at how the US closed in just a minute, but the FTSE rising on from the close last night, but since then we've been pulling back. Not quite as bad off as we were at the close last night, so we're looking for a positive start today on from last night's last trade. Quick update on where those markets are. There you can see we're up 1/5 of 1%. German 30 cash has been swinging between positive and negative for the last half hour or so. We're just up a touch at the moment. The French 40 as at where it closed out last night's session. Let's look at what's been happening in the Asia-Pacific markets overnight in Asia. This is how things ended out the session. The Australian markets closed earlier than some of these other markets, so it didn't have what was ultimately a slump in the session for many of the markets in the Asia-Pacific region. Nikkei 225 ending down 2.5%. Shenzhen CSI 300 down 2.9%, but these markets started positively. Let's take a quick look on what's been happening, or how the US markets closed out yesterday's session, I should say. Despite what was overall a relatively good number from Goldman Sachs, that was one of the decliners, along with a number of other stocks on the US markets. Dow Industrials ending down 1.5%, a 1.2% knock for the S&P 500. NASDAQ also taking a small drop at the close. And how things are looking at the moment as we look out to the start of today's trade, we got the likes of American Express coming through before the market opens today with its earnings. Wall Street cash down 2/3 of 1%. So let's take a look in some more detail about what's been happening. Evan Lucas joins us now with some more analysis about what's been happening overnight, because an interesting trading day, swinging between what was a positive start to a negative close. And as I said at the top, PBOC coming into the markets with a record stimulus.
Yes, they are. Let's talk about that first, because that's obviously quite an interesting thing. There's two parts to that PBOC stimulus story. Yes, we've now seen record levels of reverse repros in terms of making sure that the credit limits and the credit numbers going to China are there. There are two reasons for it. First one is clearly around stimulus, and we know that's the case. We know that for the last week they've been doing that. They've got this credit issue where they're trying to minimise capital outflows but also keep credit flowing around. Other reason, and it is actually not to do with markets, it's actually to do with Chinese New Year. So be aware, in 2 and a bit weeks we've got Chinese New Year. On February 6th, all Chinese banks have to shut for a full week. Now obviously it's a huge credit binge, because obviously they hand money around as obviously part of their celebration. So that is what they're trying to do, is that there is liquidity flowing into the banks as there is a huge amount of exit. But it is twofold, and there is no doubt they are coming back to what we saw, not from necessarily the GDP figures, but from retail sales, but from the IP, so industrial production. That's all part of it. Very interesting, as you've already alluded to, what happened in the Asian session, and the wild swings are still very clearly there. If you have a look at the Shenzhen, and we did show that very clearly, that the movement there was quite sporadic. Shanghai was also sporadic in terms of what we saw. It initially rallied almost as much as 4% and then dropped all of it off and some more. Nikkei continues to be in a bear market, and that's a really interesting thing.
Let me just quickly interrupt you. This is the CSI 300, and you can see this is an hourly chart, so you can see how things, I mean, it's just money just it was
and what that drop off is that after the lunch break over in China, when they came back, there was a clear decision to close off. And what's really interesting from that chart, you can see that's on the screen there, is that you can see that the 200-day moving average was absolutely tapped out, and it's been done that a couple of times. You can see that very clearly, that is been respected, and very strongly, that once the sort of the indice pops over it, they really challenge it and then drop away each and every time. So it is an indicator for you. You can see there is obviously a chance that it has now oversold, and the RSI at the bottom end is obviously saying that it's touching 20. But that is the way Chinese markets have been trading for a long time, that the afternoon session clearly is a chance to take your profit and walk away, and that's just not with what's going on right now. That's a fairly normal thing in terms of Chinese markets. So I do also, just quickly before we move off sort of what happened overnight, want to also allude to what's going on in the US markets very quickly. If you have a look at the moment, the contrarian view is very interesting, and I do want to sort of slightly highlight highlight it because there is a risk to it, because obviously you want to respect the trend. But at the moment, there is only 7 stocks in the S&P 500 that are over 70 on the RSI, and there's only 30 of them above 60. So there is certainly a huge sell-off. There is now over 32% below 15. So there's been a huge sell-off in US markets. And if you are a contrarian, if you are looking at technically, there is something to be aware of there, but you've got to respect what's on screen right now, and that is that the trend is clearly showing that there is a rebalancing. And as I also talk about, the fundamental side of it is clearly there. There is a rebalancing in the US markets, and they are clearly testing new support levels. They did that last night. It's why you may have seen that huge rally, and you can see that pin right at the end there that we're highlighting. That pin there was clearly, hang on, we need to respect the support level. It did come back to that, but the question is whether or not tonight you see it going further still.
Yeah, okay, that's US 500. Just take a look at an hourly chart on this, because again, we want to take a look at some of the intraday trades that we had. As at what were we, 21st, aren't we, at the moment? This is trading today. You can see a pullback in the markets after that mid-session move higher. But yep, RSI pretty much in the middle. Let's take a look at what we're looking at in terms of some of the moves today. Halfords, SAB Miller, Land Securities in amongst the mix. We've still got the Hong Kong markets trading as well. That's something else I do want to quickly talk about. I think we've got about an hour or so to go before the close of Hong Kong. It's now trading below book value,
yes,
below net asset value.
Yes.
How unusual is that?
Incredibly unusual. You've got to go back to 1998 when we were at the height of the Asian financial crisis, where you had Hong Kong house prices basically plummeting. You had a massive pop. That's when basically the Hong Kong government had to really step in and hedge the currency something very, very strongly to sort of stabilise a few things. So it also therefore puts them in line with sort of your typical BRICS and you really quite frontier markets. The only other market of major note is Brazil, in terms of the same situation, to have a PB below, so your price is below book assets. It's an amazing stat. It is also something to be aware of when you have a look, obviously, at the Hang Seng. So have a look at the Hong Kong 50 cash. It is clearly showing you also that it is oversold, but you've got to show you, and very clearly everything we've shown you this morning is around the trend. It is, unfortunately, to the downside. It is risk mitigation time. It is time to really make sure that if you are looking at these markets, yes, there is so many interesting stats to talk about. And this is another one. There is no doubt. You can see that the Asian, if you do want to trade Asia, if you can't get exposure to mainland China, which a lot of people can't, Hong Kong is your derivative. And that's what a lot of people use it as, is the derivative of it, is how much pain is Hong Kong expressing from China. And it is clear that it is, unfortunately, sort of wearing that on the chin.
Yeah, and as we say all the time, losses can exceed deposits. If you do go short, be very, very careful. Put a position on the market, but do make sure you use stops.
And always trade with the stops. Always. You must. In this market, is it essential to trade with the stops, because obviously other thing with volatility, other thing with regards to central bank intervention, as we saw last week, the HIBOR rate obviously came out of nowhere, and the fact that the issue around their current program created a situation where HIBOR jumped to 68%, and you were being charged 68% overnight rate. I mean, that's a staggering figure. So you must be aware of the risks that are currently in there. So trade with a stop. There is no reason not to trade. There is obviously lots of trades screaming out of you at the moment, but make sure your risk mitigation is really well respected.
Yeah, okay, European markets open in about 90 seconds time. We've got numbers out this morning from SAB Miller. Just watching this stock over the last 2 or 3, 4 months or so, because we had this bid come in for SAB Miller from AB InBev, looking like it's all going to be completed very, very soon. Still a relatively liquid stock. SAB Miller reporting third quarter trading statement this morning. Organic volumes up 3%. Estimates have been 1.5%, so looking potentially for a positive number there. Also, Remy Cointreau. I do want to highlight this one. I don't have a chart for it. Interesting enough, we're talking about China. Remy Cointreau, sales are up because of China. I don't know if it's people drowning their sorrows or what they're doing, but I mean, cognac sales in China racing away.
The Chinese beverage market is this sort of, like everything, is a frontier market that you just want exposure to. If you look at Saab Miller, they're a really interesting one. Part of the reason they bought up Foster's a couple of years back was the exposure Foster's had into Asia, because they also had to beat somebody like Asahi, the Japanese brewer, that had a huge exposure in there. And Saab Miller, part of their initial burst over the last couple of years has been because that Chinese market is there. And the other market to really be very watch is actually Scotch. The demand particularly for Scotch into China is incredibly strong, because again, part of their move and their current sort of migration from probably a third to a first world sort of movement is the rise of the middle class, and middle class clearly want premier products. It's why something also, if you want to stay in this part of the world, look at something like Pandora. Pandora's entry into China has just unlocked so much value in that stock, and if you do follow the Danish market, Pandora now just monsters everything. So China, if you can find a luxury good, particularly out of this part of the world, that you can actually penetrate without it being copied, which is obviously part of the things to be aware of, you can do incredibly well. And that's why cognac, scotch, but particularly high-end beer and high-end wine does incredibly well in that market.
Yeah, okay, we'll look at SAB Miller's stock in just a minute. FTSE 100 is opening with a rise. You can see they've 0.75% now. We are also up on the German 30 cash and France 40 cash. Very fickle markets this morning. Let's go back to this FTSE hourly chart. I just want to show you the context, this rise that we've got. You can see the green candle on the right there. This is where we're taking things now. So European markets started with a little bit of strength this morning. Just to return to the SAB Miller stock, we do have an opening trade there coming through. It is not too far removed on from where we saw the markets close out last night.
And that's clearly the fact that obviously the market is truly believing that the InBev deal is a done and dusted prospect. So despite the fact that results came out this morning, you're not going to get much of a change, because clearly the original spike back in September was all around that deal, and the market believes that it is now basically in regulators' hands to basically give it the final stamp of approval. It's going to get rubber stamped and it's done. So unfortunately there's nothing exciting there in terms of the trade. It will be interesting to watch AB InBev when the deal does happen and what happens to the Saab assets, because that's the next question, is do they, as it's been reported off the street, to start sort of selling some parts of it?
Well, they've got to.
Yeah, exactly.
There's no doubt. I mean, it's too big a company.
Yes, and that's obviously part of the regulation ask. It's which assets do they sell? And as we just alluded to, there was talk coming off the street that they look at selling the Asian section. Now that's very interesting, considering how much of a support it's been for Saab Miller over the last 3 years.
Yeah. Okay, Royal Mail, another one we're watching this morning. That stock is up 1.75%. Again, there's a hefty trend going on here. It's very difficult to see this trend being broken, although today we are up at the moment 1.75%. But if you look at the 1.75%, that green candle there on this daily chart, you can see in the context, the big slide that we've seen in this stock over the last couple of months or so. The company has come through with overall group revenue change of 1%, a plus 1% rise in revenue. International parcels division is down 1%. We've got internal parcels volumes up 4%. Of course, this is quarter compared with the same quarter last year, because Christmas is a time when a lot of these delivery companies do have an increase in their parcels deliveries. Letters, well, down 3%. We know that there's a drop in the number of letters that people send out. I can't remember now when I last put a stamp on an envelope. Volumes up 11%, their revenue. Overall for the general logistics systems, this is the way in which they get parcels around the country, up 10%. So a lot more parcels been delivered, and we've not just seen this with Royal Mail, we've seen it with other logistics companies here in the UK. Royal Mail at the moment is the second best performer on the FTSE 100. One other stock I do want to follow just very quickly is Land Securities. Earlier on this week we had a very good number, very positive number come through from arch rival British Land. Very good figures for British Land, and we've got what appears to be a very good statement this morning from Land Securities, the company which owns a lot of retail parks and also business premises around the country, a lot of it in London. It is doing well. The stock is up 2/3%, but bearing in mind this is pretty much the pace of the FTSE at the moment, so that's going across with its benchmark on which it trades. Record retail volumes, record footfall, I should say, in its retail premises around the country. So at the moment, I don't want to quit that. Let's get back onto my chart. I'm quite sure that's not disappearing. But Land Securities at the moment is looking very well, as I say, pacing the market. I've lost my charts. I'm going to get Ev to come in. We've got to talk about ECB as well.
We do. It's ECB day. Get excited. Unfortunately, don't. And the reason I say that is that it's unfortunately, he probably lost his mandate in December. And let's be honest, that is probably what happened. Everybody was so excited by what was happening. You could see a very clear inverse correlation trend. You could obviously be short euro, particularly obviously euro dollar, be long anything with regards to continental exposure, particularly the DAX. Obviously, that is the better way to play that inverse correlation with their manufacturing index that is the DAX there. He came through not delivering in terms of, now admittedly the market's expectations were sky high. In fact, I would almost say touching sort of unbelievable levels. He was never going to appease them. But what is now is that it's clear that he may not have the mandate that he probably once upon had. There's also a belief that maybe he cannot, in this current market, continue to move that way, because we're hearing enough rumblings coming out of Berlin that they're very concerned about the possibility of continuing on with probably the current path that was mooted. Hasn't happened, but the current path that's mooted. So it is something to be aware of. So what are we likely to see today? Look, you're not going to see any movements. They're probably going to want to see how much translation is still going on into the market, with the fact that obviously you've got a negative deposit rate, with the fact that the lending rate is basically zero. Do you see the possibility of further cuts to the deposit rate to maybe as much as minus 30 bips, or even going as far as some people wanting, which is minus 50 bips? Probably not. He will allude to it.
That's a massive move potentially.
Yeah, exactly.
I had heard a 10 basis point move
I have
negative.
too, but there is some people forecasting towards the end of this year a negative deposit rate that might need to be minus 50 basis points. That's an amazing situation. Yeah. The amount of capital release on that is also something to be aware of, but he can't do it. That's what you've got to probably put into your model, and that's the disconnect at the moment between what you're hearing from economists and probably from sell-side analysts to what the market is telling you. And the market, we always believe the market is right, and I personally think this is more than that. This is the market saying we can't believe a statement like that, because the issue around the banking, the issue around liquidity that would come with a situation of that kind of deposit lending is crazy, because the banks have one option then, and that's unfortunately for them to start looking either internally inside continental Europe or looking at offshore, and they don't want to have funding that's going offshore and being lent to the BOE, for instance, or being lent to the Fed to sort of manage that overnight capital rate. So that's his dilemma, is that he wants to stimulate their economy, but he wants to make sure that capital stays inside continental Europe rather than escaping it.
How do you trade this? Because we were talking earlier on in the year about this move that we saw down, which took us down to these lows in March last year. And what next stop? Then everybody's saying this dotted red line. Parity.
Everybody was talking, and you can see that inflection point on that chart where you've basically got that cross in the support. So the original down channel and then the jump up. There's now a genuine fight. In fact, if it was me looking at what you've got on that chart, you may want to start thinking about a Bollinger Band from December, because there is now a very big channel in terms of what's being formed. If you really jump in there between 106 at the low to as much as probably 110, as much as 112, and it's stuck inside that. So if you look at a Bollinger Band and you bring it right into probably a quite close area, you can see that if it reverts away from the 20-day mean, you jump back. So if it touches the top of the band, comes back to the 20, drops the bottom, back into it, because at the moment you've got two options. If you've got your fundamental view, ECB do want to stimulate, probably unfortunately don't have the mandate like they probably once upon had. You've got a Fed that has a mandate of obviously looking at raising rates, but has an economy that is starting to splutter. Even some people are using the word stall. Corporate earnings now have had 3 quarters of negative growth, and it is pretty much down to the fact that the US dollar is so strong, 36% increase over the last 52 weeks. So you've got this fighting on the fundamental side. So your Bollinger Bands are telling you that, and I think if you do want to trade it, and you can see a drop to the bottom part of the band, you will probably see it revert back to the mean, and on the vice versa, if it does pop up to currently you're looking at 1876 there in terms of the band moving up, that you can see it dropping back, and it's really strong. So go back to the December 4 meeting, you can see that big that big sort of pop candle. Since then, that is a really sideways trending move, and it's stuck inside it. So that is how, if it was me trading it, the RSIs has given me nothing there. You can see very clearly it's stuck right in the middle. It's not oversold, it's certainly not overbought. There's nothing there that's really exciting. So I've got my fundamental view on the back of my head. I know what the ECB want to do. I know what the Fed want to do. At the moment, they're sort of playing a stalemate war across the Atlantic. So the currency is telling you that, and that's how I trade it, is look at the Bollinger Band.
Yeah, okay, and as we've been saying, it's really all down to the dollar, I guess.
Yeah, exactly right. And your opinion on, unfortunately, on the dollar has to trump everything else. Yeah. And if you have a look at the DXY, so the DXY, which is the trade-weighted index of the US dollar, that is the one to watch, because we now know that there is enough major players over in the US talking about the fact that it is overvalued, and that there is a point now that you could be seeing a bit of an inflection in the short term. Still not sure yet, because clearly they're still isolated with the fact that the Fed is the only major central bank in the world that looks like, and I do use that word deliberately, raising rates. Mark Carney was probably the only other person around that may have done it at the Bank of England, and he shot that down this week. So they are on their own. So you've got to have an opinion on Dixie, and you've got to have an opinion on the US dollar, and that needs to be your base case opinion, your anchor point for your fundamentals, and then trade the technicals in front of you.
Okay, Ev, thanks so much indeed. Evan Lucas there, joining us here in London pretty much all this week, and he's normally resident in Melbourne. He's off there at the weekend, but we're back here. Let me just quickly tell you, 10:30 this morning, charting the markets. Hope you can join us today for a look at some of the technical analysis around some of these charts we've been talking about today. We'll be talking about those indices as well and how things are moving. European markets, just a quick snapshot of where we are. I think we're up still on the across today, almost 0.9%, better off here in London.